Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Guess what? We had a surprise last week. We didn't dive into the Empire State Manufacturing Index because it's not really housing related. However, it peeled back a layer of how vulnerable we might actually be as an economy. This index is a leading indicator of economic health. Businesses react quickly to market conditions, and changes in their sentiment can be an early signal of future economic activity, such as spending, hiring, and investments. The reading was expected to come in at negative 8.7. Anything below zero is bad news. Well, the actual reading came in at negative 32.9. Yes, negative 32.9. This rocked the markets and caused a lot of market makers to take a step back and reevaluate where this is all heading. Which leads us right back into PPI. And PPI is where we found a bit of relief because all PPI measurements came in better than expected, which is a sign that we can reasonably expect consumer price index numbers to follow suit in the months ahead. We shall see. There's still a lot of steps between producers and consumers, so further evaluation of this is going to be necessary. Then we had retail sales and core retail sales both come in very weak. Not a really good way to start the new year. This one will probably make its way up my radar as we monitor signs of improving or deteriorating conditions in the overall economy and how that weighs in on mortgage and real estate. Let's quickly touch the NAHB Housing Market Index, the National Association of Homebuilders. Do you remember what we talked about? This index has been getting clobbered month after month after month, falling from 83 a year ago all the way down to 31 in December of 2022. Well, it came in at 35, which is better than the previous reading of 31, but well below 50 still. And existing home sales continue to be in the ditch as they booked their 11th consecutive month in decline. You can start to paint the picture that one side of the coin might be getting some sunshine while the other is completely in the shade. And that's the story here. With inventories remaining low and mortgage rates still well above their 2020 and 2021 lows, this kind of news overshadows any positive change in the home builder sentiment. With that, let's get on to this week's market outlook. This week is actually a very light week because it's considered a dark week. This refers to the week before the Federal Reserve announces their next rate hike decision and does their press conference, aka their publicity dance. Okay. There is one thing we're going to watch, and it's the advanced reading on the GDP. It is advanced, so not final, therefore not as relevant as any publicized final number. Theoretically, this shouldn't weigh in much on what the Fed does February 1st, but if somehow it's so off the mark that the reaction is house on fire, then maybe we'll see it mentioned on the February 1st press briefing. Otherwise, Jerome Powell has been pretty clear. They're focused on price stability, a softer jobs market, and a 2% inflation target. So, what's all this mean for mortgage rates? The markets continue to gather all the data they can leading up to the Fed rate hike decision and press conference coming up on February 1st. Intermittently, rates are following the direction of the markets going lower and higher, day in, day out, depending on the conditions of the money flow. But if you need to make that next right step in mortgage and real estate in 2023, it's imperative you get started now. As we've been discussing, rates will likely hover in this range where we're at for quite some time until something obvious shifts sentiment and money in a defined direction. Until we start seeing progress made to reduce inflation, expect that elevated rates are what we're contending with. Also, a reminder, there's a lot less buyer competition in this market. And if the home builder index is any indication, there's still not a lot of inventory coming to the market anytime soon. Therefore, prices could stabilize or lightly correct versus crash and burn, and someone else's cold feet could be your opportunity to get in that dream house in 2023. If you haven't heard about the 2-1 buy down yet, that's the focus of last week's podcast. Memo and Brian reviewed the program and talked about how people are using it today to win in the market. Take a listen and see if this is what can help you achieve your ownership goals in 2023. Thanks again for tuning in to Monday Mortgage Minute. Remember to like, subscribe, and turn on notifications so you see this show right when it posts each week. Share this video with someone you care about so they can win in mortgage and real estate in 2023. And we will see you again next week.